Hello again, everybody. It's Harry Boxer, the Tactical Trader. It's Black Tuesday, the 7th of October, and today's the charts of the day is going to be more of a market review. This is a very critical time in the market, and I saw some historical type numbers today that I felt warranted a special report rather than charts of the week, and we will go over a few of those too. This will be a longer version as well. In front of you, you have the S&P 500. As you can see, the stock, the index was in a 5-year bull market after triple bottoming in 02 and 03, and then rolled over in a 5-wave decline with a spike down here that took it to below 1,000 today, closing it down 170 points just on the week so far. With a major support level just beneath here around the 950 zone, there's a possibility we may be coming into an important low, and I'll tell you why I think that. First of all, daily, you can see we spiked down in the last few days dramatically from about 1250 just in the last 2 weeks down to 996. So kind of a throw the baby out with the bathwater mentality. I'm seeing the same type of activity on the NDX. Right there, you'll see that it was coming down, but accelerated to the downside quite dramatically, coming from over 2,000, or around 2,000 in August, less than 2 months ago, to 1329. We've lost a third of the value in about 7 weeks. But more importantly, when we look at numbers like the VIX and Vixen, you'll see that the Vixen, for example, is that's NASDAQ oscillator is 58.51, and the VIX New York oscillator 53.68. These are fear indexes that are normally in the 10-20 range, maybe 30 at extremes, but this is a number that we haven't seen in many years. Here's the VIX, for example. As you can see, over the last couple of years, the index has been down in that 11 to 20 zone, and over the last 6 months or so, it's oscillating between the mid-teens and the mid-30s. But today, it's spiked up into the almost mid-50s, and also at the top of this channel that has been building. And historical extremes going all the way back 20 years, you'll see that most tops peaked out in this range right here. The Vixen looks a little different. Had much higher spike levels in 2000 and 2001, but the highest level we've seen in 7 years, right here on the weekly chart. Also a spike up near the last peak back in 02. So these are indicating incredible oversold levels. The S&P 500 bullish percent index 7.4. I don't think I've ever seen that. The NASDAQ 100 bullish percent index is down to 3. I think that's the all-time low. The new low ratios are phenomenal. There was almost 1,900 new lows versus just a few new highs. Those are levels almost unparalleled. So we're at levels now that I think should spawn some pretty strong rallies or snapback rallies in stocks. Starting with, let's take a look at Apple. Apple's rolled over from mid-August from 178 down to 88, or about 90 points, and virtually straight down except for a couple bounces in here. So this is the kind of stock that in a decent rally I think can get back to the 110-20 zone, and the calls may be really good options there as well. As you know, China aluminum is something I've been interested in lately only because of the discount from 90 down to 12. Again, it's always dangerous picking bottoms, but with the indexes and oscillators the way they are now, we're very likely to get strong snapbacks. In this case, you may see this one bounce back up to about 16 or 17 over the course of that. APWR has absolutely gotten decimated from nearly 30 to under 5, I believe was yesterday, 4.5. Today it closed at 505, but the kind of stock that can easily snap back to 7.5 to 9.5 zone over the course of the next few days to weeks. Clean energy is another one that has just gotten smashed really, really quickly to new all-time lows, and it may be due for a snapback all back up towards that 11, 12, 13 zone, something of that nature. Canadian solar, one of my favorites, has gotten creamed from 51 down to 11 over the course of the last 3-4 months, and is way oversold short term. Could easily snap back to 17, 18 zone, in my opinion, for a nice 40% gain over the course of the next couple, 3 weeks perhaps. Dry ships, another one that is absolutely decimated from 116 down to 21.85 at the close today, and it can easily snap back into the low to mid 30s. Some other solar stocks that have gotten hammered is JASO from about 26 down to 6 and change. Mosaic, which I highlighted recently, dropped another 325 today. As you can see, it's rolled over from 160 all the way down to yesterday's low at 31.43. This is a stock that could snap back into the low to mid 40s, maybe even high 40s over the next couple of weeks. And we can go on and on and on with other examples. Solar Fund Power is a solar energy stock I think is overdone to the downside, having dropped from 21 down to 7.5. And of course, SQNM, which I think will be a strong snapback candidate, finally rolled over after being one of the strongest stocks in the street. But that's what you get at the tail end of every decline. The stock is now down near its important August-September double bottom. I'm hopeful that holds, but if it does, this can snap back to 23, 25, maybe even 27 or 8 very quickly over the course of the next few weeks as well. So there you have it. Several ideas for you. The market is in an extremely volatile state, but at a point now that we can see some strong snapbacks based on the historical numbers. S&P 500, for example, the OEX, which is tied into the S&P 500. It's actually the OEX is the S&P 100. But I believe that if we go lower tomorrow morning, that the options may be very attractive for a multiple 200-300% gain over the next few days, if and when we get that rally. Good luck tomorrow.